The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
We saw a solid close on Monday with some late buying coming into the grains, mainly corn, beans. Chicago wheat kind of led the way to the upside on Monday. Overall, not a bad start to the week. Here to help us explain it and take a look at things, John Heinberg with Total Farm Marketing is our guest analyst here today. John, good to have you back on the show. And we were chatting a little bit off air. It was a surprisingly good close on Monday to kind of wrap up that last hour of trade. Really found some decent buying strength, John.
Yeah, it was really nice to see that come flowing into the two cereal grains, wheat and corn. I think wheat was probably the trigger trying to push at least, get close to that double-digit higher type move. And that just seemed to wake up the corn as well. And, I mean, you go look at it. We talked about the commitment of traders a little bit last week. We saw their numbers on Friday, about 145,000 net short corn contracts. It's one of the largest positions in the last handful of years in terms of this time of year. Mm-hmm. So it's a spot, in the last two times they were down here, looking at the historical side, they turned that around for a nice little, harvest rally type thing. And maybe we're looking at that here. There's still enough questions on yield out there that maybe we're just going to see a little bit of money flow move into the markets led by possibly wheat. We'll see at this time frame. The biggest key is still going to be the demand side. Now, we did get some export inspections today. They weren't all bad for corn. They're actually improving a little bit. And then you throw that sale of corn from Mexico in there today at 1.6 million metric tons and, seeing 1 million of it come off this year. Now, again, Mexico sales still don't fire the market up, but it was still at least nice seeing that big number come through this morning.
Well, and thinking about that and some of this, just harvest type moves in the market, maybe a little bit of a push here in the corn market through harvest. You mentioned the funds and the short position they're holding, and I find it interesting they're holding this position ahead of a quarterly grain stocks report on Friday. So I wonder, could we see some money movement around in this market here this week ahead of that critical report, John?
The thing is, they've been sitting on the short side of this market since midsummer or early summer, so they're well into the money in terms of their position. And then the grain stocks report, that's a report that can give us some movement. We'll see that on Friday. That's our kind of last chance really to go back and maybe adjust a little bit of last year's harvest, see where some of the demand numbers are. Really of the two grains between corn and beans, corn's got a little bit of unknown factors with that feed and residual side in there, where beans, we know what we ship, we know what we crush, we get those numbers fairly specifically, on a monthly basis, but corn does have that feed factor in there. Now, on the feed factor side, cattle hog numbers aren't exactly, through the roof here. So, and the USDA's got some pretty good demand on the feed front in there. But there's also just maybe some other things in the pipeline here that we expect that number to be a little bit lower than last year. But at the same time, kind of maybe validate where this market is. I've seen some big surprises on these quarterly grain stocks report, with the funds holding that big short position here and growing a fairly heavy position, and also even in the wheat side or the bean side, still positive, but not one of their smaller positives for a while. Yeah, maybe they're pulling some money out here, just take a little risk off, let that report hit, and then decide what direction they want to push this thing for a while.
With the case of D's corn getting back above that 480 mark, 481 and a quarter at the close, and I know we've been hovering around 475. Does this feel like this is kind of our latest area? I'm not going to say necessarily new, but our latest area of support, at least as we roll through this early part of harvest, John?
Yeah, very much so. Last week we went down to 467, and then we turned this thing higher and, had a good Monday, Tuesday last week to kind of get to this point. Now we're kind of sitting in here. that sale of corn to Mexico helps put a little bit of a bottom. And if Mexico wants to step into the market at that price point and buy that many new crop bushels, that just tells you that they think it's a value there. Now, again, sometimes that takes a few days for it to get to the news wires. That may have actually happened Monday or Tuesday last week, and now we're finally getting notification on it. So that could have been that signal that fall low is here. Now, we're obviously not out of the woods. Supply side of it is still, heavy. The demand side is still questionable. We get a negative number on Friday, and those grain stocks on the other side of the coin in terms of being heavier than we anticipate, then we got new lows in front of us. So it's going to be an interesting week here. But this is a spot I was kind of targeting. I thought the market could hold here. It looks like it wants to. I think tomorrow could be a really key day. We got a lot of moving average resistance right over top the corn market. We finished right at the top of the trade today. Can we get through that window? I'd like to see us get up through like 485, 486, and then I feel maybe a little bit better about a little run to the top side here on some additional short covering before that report this week.
John, with the wheat markets, especially Chicago wheat, kind of the leader on Monday, some more headlines out of the Black Sea with more attacks on port of Odessa, et cetera, and some escalations on the Ukrainian side, attacking some Russian ports. So maybe feels like seeing more activity there was maybe the reasoning anyway to stir up a little bit of buying strength in Chicago wheat on Monday.
That's always there. I really still think the markets move past that until we see something happen on the Russian side of the equation in terms of Ukraine reaching out and hurting something in terms of Russia's ability to ship out wheat. That's where I think it is there. But, you just add it to the pile of problems. Exportable supplies in terms of countries that export wheat is at multi-year lows. You got big problems going on in Australia. You got little problems in a lot of other regions of the world. The USDA made a bunch of adjustments on the last report in terms of those areas. So it's a spot too. We put a bit of a bottoming action in here about a week and a half ago, 2 weeks ago. We went kind of back down slowly and retested that area. Today we kind of popped out of there again. So again, kind of feels like we're rounding out a bottom. That's what it kind of looks like, a round bottom on this wheat chart. Maybe, again, we just see the funds start moving a little bit of money back to the green side here. Typically, again, December wheat stays fairly strong from when the October window through its expiration. So, again, now we're talking seasonals here, and that could be part of this because this market really doesn't have a lot to trade off of. And so seasonality could be something that we see.
How about this soybean market? You mentioned that real briefly here just a few minutes ago. I look at Novi Beans, 12.97 3/4 on Monday's close. A lot of pressure in bean oil on Monday. What's your take in this soybean market here as we're near the end of the month, John?
I've been watching that bean oil market, and if you go look at charts there, and I know I'm talking a lot about charts today, but sometimes when the news is what it is, a chart can turn just because it needs to. We got the 100-day, 200-day moving average just right below where we closed today. That's a pretty key spot. I'm kind of curious to see how bean oil handles that area. We were down hard today, almost $2 a pound, over $2 a pound in those front ends, and just kind of finishing short of that area. It's an area I was kind of watching. If we can see some turn in the bean market there, or the bean oil market there, that could help this little turn we saw today. Decent strength in soybean meal today. I think that's where we got our bid from. But even on the soybean charts, there's a low that goes all the way back to March. You draw a line through all those lows here to today's point, and we held that area today. So it's what we call a little bit of a speed line that runs through. And also we went down within 2 cents of that August 8th 1282 number and held that today. So again, some technical things are pointing the right direction. We'll see if the money can continue to flow, or is this just some movement off of a Monday. Excuse my phone there. My apologies. Yeah. So with that, we'll just kind of watch what tomorrow gives us. Again, beans of the three has got the biggest supply issue. And if those numbers come in friendly on terms of stocks or even some of these yields, that's the market we're going to see maybe the most price movement quickly to the upside, just given the tight supply picture here, at least in the front end until that South American crop comes together.
And I know we got planting starting up in South America, so that's going to be a talking point, and more harvest yields as well. I know we're getting a lot of harvest activity into much of the Midwest. John, anything new you're hearing on that front? Still variability out there as far as yields? What What are you hearing from your clients across the Midwest, John?
That still seems to be the key, and is the variability again, even in both crops. Again, last week I heard a lot, oh, it's better than I thought. Today I heard a little, well, geez, it's down 15 bushels the acre on corn than it was last week. Again, as we're getting into different fields, different soil types, different management practices, all come out in this. And then we're seeing that also on the bean side as well. It's going to be one of those ones. It's going to be hard to get the picture, totally pegged in terms of where we are with this yield, possibly not until January, even later, just because of that variability out there. Plus also the pipeline's a little empty in some places. So we're going to see some of this product get put right to use. That kind of messes up some of these numbers here too, because again, things aren't going to be in the system. They're going to get processed right away as it comes in. So we'll have to kind of watch. I do think some of the weather and possible rain coming through also maybe has a little bit of optimism in the river. I think that's a big factor pushing that soybean market lower. And if that can kind of straighten itself out too, not only help out the bean market a little bit more, knowing that we can get some stuff down to the Gulf and get it out of here on the export front.
We're having a conversation today with John Heinberg from Total Farm Marketing. John, let's look over at livestock trade. Cattle had that cattle on feed report from Friday. Really seemed like everything, no surprises, came in pretty much as expected. What's your take on that cattle on feed report and the lack of movement, I guess I'll say, in both fats and feeders on Monday?
No, that was exactly my take on it. It was just, it was the numbers that we expected, but again, it still stays friendly, big picture. Just doesn't show anything changing. The numbers are tight. They're going to continue to stay tight. You're looking at placements again, well under last year. That's going to carry all the way out. And again, we saw a little bit of strength today in the spring and summer months, kind of reflecting that again on the report. So it really, in terms of the market moving side of it, it wasn't very big. Now we got to watch what happens with the technical, the money flow, what happens on the demand side. Retail carcasses were softer again last week, but it seemed like Friday we held the 300 level pretty quickly. We jumped higher at midday on Friday. So that just tells you there's still some good demand about that point. Cash trade was quiet last week overall in terms of, it was mostly steady. Maybe not, the Packers aren't as bought up as they need to be here, so that could come into play this week. Today was just kind of a choppy day. I think we're going to probably wait till the end of the week to really try to find some direction here, unless we see some strong movement in the retail side one way or another before we get the cash trade at the end of the week.
Yeah, and that cash trade hasn't been moving a whole lot either lately. It just feels like this market is continuing to churn up at these highs. And talking with some folks in feedlot country, the talk of rebuilding this herd is still maybe a little ways off. So it seems like we're going to continue to pull inventory forward until we get to a point where we have to start rebuilding. That's the kind of tone I'm getting in this cattle market right now, John.
I would agree with that assessment. Again, I've still been talking $200 cattle for lives. I still think that's a target we're going to see somewhere in the next probably handful of weeks here, just on the pure fact that those numbers aren't out there. And again, to get those numbers, we got to continue to keep adding some value. Plus, for the producer right now, you get feeders at these cost levels. Corn's still relatively expensive to them at $4.70, $4.80 a bushel, at least on the board. The margins are really thin. And again, you're not going to see expansion until there's some margins there that are profitable for the producer. And we're not seeing that right now. I know prices are amazingly high, but again, dollars and cents, what they're putting in, the risk they have in terms of the inputs into that one animal are just astronomical. And so again, it just tight margins doesn't bring expansion.
How about this hog market? Feels like we're just kind of chopping around in hogs too, as we were trying to find some new support levels here. What's your take in hogs?
Yeah, last week was absolutely ugly in the hog market. I mean, big reversals on the weekly charts. We lost $6, $7 on the December contract. Yeah. Most of that in the last 2 days of the trading week. It was really kind of a sidewall there. I didn't even know it was coming. It was just like, wow, where'd this sell-off come in terms of that side of it? So that really turned the charts pretty doggone negative. You did get a little recovery today, but you lose $7 and you come back 40, 50 cents. It's just not something to make you feel warm and fuzzy. Did like the retail values today. We did the same thing like with the carcasses for cattle. They held 300. We jumped back up to above the dollar level on carcasses today. So that'll hopefully help us out. Maybe it just fell to the bottom of a range and we're just going to build a big sideways range between last week's high and lows. We'll have to see. But technically, we saw some pretty good damage. Maybe it was just some buy cattle, sell hog type mentality. But it was really kind of like I said, caught you a little bit off guard here, especially given where the cash market is, retail values are. We even had a really good week of export sales last week on Thursday, and the market just proceeded to fall apart. So, again, there's the hog market being the hog market again, unfortunately, at times, and we'll have to see if we can find some stability here. Maybe start working a little higher, even though today it did kind of hold its lows and turn a little bit higher off those lows.
John, let's round it out in the dairy market. Feels like a bit of a mixed bag there on Monday as I just take a glance at the quote screen. Any notes in dairy?
Biggest thing is the cheese prices and what's happening there. Now we're under $1.60 for block barrels today. That barrel market's just washed out. Now it's pulling the block prices with it. We put milk prices to new lows last week. Maybe we got a little bit of bottom picking here in those front months today. So that's kind of where we're seeing a little bit of strength. But again, you go look at the deferreds, there's a pretty big gap from front to back, and that makes me a little nervous for the producer. You just got one of those markets that's just going to continue to be in a slippery slope as we go 1 month to the next as time passes on the calendar, unless we see some real structural changes in terms of demand and price.
John, any other final thoughts or anything you want to reiterate for folks here today?
Again, make sure you're really thinking about what's going on here. Look at all the different possibilities that are out there. What are you doing with your bushels this fall? That's something I'm having a lot of conversations right now. We got some good carry in the market. How do you protect that carry? Things along those lines that are coming at us here, because there's a lot of risk this year to storing bushels between the interest rates, between basically a heavier supply market. That if you go put those bushels in the bin thinking, hey, I'll capture the gains down the road, and that all falls apart, you really kind of double whammied yourself in terms of risk. So make sure you're thinking about things, ask questions of people, figure out what you're working on. I know prices aren't great here, at least in terms of for corn especially, but things could get a lot worse if those numbers don't improve in terms of the demand side as we move into the end of the year and the first part of 24.
John, if folks want to reach out to you and get some advice there at Total Farm Marketing, what's the best way to do that?
Sure, love chat with them anytime. Give me a call, 800-334-9779. Shoot me an email at johnh@totalfarmmarketing.com. And again, that website of ours, totalfarmmarketing.com.
John, always appreciate the time. Thanks for joining us this week. Have a good one, and we'll talk to you again next week.
Sounds good. Have a great week.
John Heinberg with Total Farm Marketing, our guest today here on Market Talk. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.